The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Now, the author of The Path of Least Resistance and the Tech Insider, David White.
And welcome to another excellent edition of the Power Trading Hour with me, your humble, lovably, squeezably soft host, David White. It is September 12th, and we should be seeing some huge volume in the markets. And what do we have? We are going sideways, and we will talk about that in a minute. On this day in 1940, in a soon-to-be war-torn France, a collection of prehistoric cave paintings are discovered by four teenagers who stumble upon the ancient artwork after following their dog down a narrow entrance into a cave. It says a cavern, but I think it was a cave, actually. I've seen it. Anyway, the art was somewhere between 15 and 17,000 years ago. If you're watching on Tiger TV, you have a great example of my artwork that you'll be able to see. It's from my early blue period when I was probably, 7 or 8 years old. And unfortunately, my artwork never got any better. That is it. For those just listening, it's a stick figure. So, reminds me of a great old joke. Unfortunately, I can't tell it here, but I'll tell it later. Anyway, it is what it is. Artwork is kind of interesting. Saw that they found that Van Gogh in somebody's attic earlier this week. It's worth like $20 million. It'd be nice to find some $20 million up in my attic. Don't think that's going to happen. I don't think I have an attic. I've been up there, and it's creepy and disgusting. And hot. Not very good. So what do we have going on in the marketplace? We're, off 2.5 points on the S&P cash. Pretty much what I was looking for. In fact, I got out of most of my positions. We talked about that. The options have all gone extremely delta neutral, more than I've seen in years. And it looks to me like they've locked us up for the Fed announcement next Wednesday. And all I can hope is this thing goes to next Wednesday as flat as possible. And all the premiums in options go about as bleed just about as much as they can, and I'll probably be picking up October options probably on Wednesday. At least that's what I'm hoping for. And we might get a good deal on them if this market just seems to sit down and go flat. Anyway, Europe, even Spain is up 0.6. Normally, there's at least one of these stocks out here in Germany, UK, Spain, Italy, or the Irish, or even Greece couldn't get 1% move today. It got up 0.8%. Pretty good indication that everybody, I think, in the world now is just waiting for the Fed next Wednesday. What is it, 1 o'clock, 1:15? Something like that. And until then, I'm expecting probably a 10-point up or down window since then. And I don't think that there's anything that's going to change in that till we'd have to have a major change. It looks like they put up the Great Wall of China to keep this market from moving between now and then. So if you want to be making money and you think you can do it in 3 or 4 days, maybe the best thing is to be selling spreads and collecting the decreased or maybe covered calls or covered puts or something like that, because I don't think you're going to have any kind of movement for the next 2 or 3 days out here, probably into Tuesday. Wednesday, I suspect we probably sell off 10 points down and get ready for the announcement and whether or not what Ben Bernanke is going to actually do. But don't be surprised if we have a little or no movement for the next 2 or 3 trading days out here. And everybody is pretty much locked and loaded to make sure that this market goes nowhere until that Fed announcement. At least that's my call. Gold is getting shellacked once again, but it is down to the first support level. I expect it to bounce out to base out here for a while. And maybe we get 10 pairs, or 10, $20 up or down out of this. But for the most part, it's just hard for me to see that the gold is really going to be moving much lower right away. I think more likely we've got a minor support level here. I'd love for this to get back to at least $1,275, and if not $1,200. Everybody will be saying that gold is totally over, and might even get $1,150. I would love it. I did not buy it the first time because I suspected that there was going to be a pullback once again. When I buy it, gold, it's going to be for the next 2 or 3 years, and I'm not going to be playing it for $200 or $100 moves, even though probably pretty good. I suspect the money in the next gold move is buying it and sitting on it on the longest contract I can find. I think we'll get a good opportunity. Even if I have to get it at $1,275 and it goes to $1,200, I'd be happier. But this is exactly the kind of move that washes out the most ardent of bulls in gold, and that's what I want. I want complete and utter demoralization in the gold market, and wailing and gnashing of teeth, people jumping off tall buildings. I need a sign that is so vibrant that a blind man could see it. So anyway, probably going to base out here for a little while. Like I said, I don't suspect that we're going to fall off the edge of the earth in the next few days, but I think in the coming weeks we could see a nice move. What I'd like to see is 100 or 150, at least $100 one-day intraday move, or something where it just screams that no one in the world can hang on to it for another minute, and then you're probably going to find the kind of low that comes along generationally, one that is for the ages. I think we have a very good chance that we could get that kind of a low out here in gold. Lululemon actually getting shellacked and beaten like a redheaded stepchild, a baby seal, all the other mixed metaphors that I like to say. It beat estimates on both the top and bottom lines for its most recent quarter, but they basically were guiding down. Still having problem with those ultra sheer pants that they had. I don't think that there was any problem with them. Of course, if you were a stripper. Other than that, probably having a little problem. It was down a little bit worse this morning. It was actually down to 63.50 for the low. It's still off 3.5%. But kind of a rudderless company adrift. Really needs a new CEO, and probably one of the bigger moves out here today. Pandora. Pandora, another one. We talked a little bit of this as a bank shot on Apple. To me, this would be an opportunity maybe to short Pandora in the near future, maybe in the next few days. Nobody's making any money in these streaming audio companies. I don't know how anybody, looking at the financials, I don't know how anybody could. They got a new CEO and everybody's all excited and all wet and bothered and everything, but I just don't see how anybody can make any money. Everybody yawned when Apple did it this week. Probably the only thing that everybody yawned about was good for Pandora, and the fact that it didn't look like anything that was going to kill Pandora. But this is a company that just loses money regularly. They are trying to go to Congress and change how much, by statute, they have to pay the people that actually create the music. But I think that's probably a lost cause. There's too many people that get a million plays with the music, and they end up with $40. There's absolutely no reason for the musical community to get around streaming music and decide that they really want to get behind it, unless they just write off recording and decide to do live events is the only way that they're going to make money. And I went to a nice concert last week, and tickets are pretty expensive, but probably 90-95% of a artist's income these days is touring. Almost none of it is making any money, and they almost, and I probably rightly blame Apple for the iTunes issue. But if you have one good song, no one's going to buy your album, or very few people, let me put it that, are going to buy your album. Young people have been taught to pirate it, and if they are going to buy something, they buy one song. I used to have an album that sold for $10, $15. Now you're getting 99 cents. And, of course, if you're the artist on that, even from Apple, you're getting a nickel. So it just doesn't matter anymore to artists. They're pretty much had enough. And Pandora, probably one of the weakest of the streaming audio companies out here. As much as they want to push this dog of a stock, the next thing this thing makes a major high, I suspect that's it for it. That will probably be the all-time high. Maybe it hits $25 or something, but that'll probably be the high until the thing goes out of business. It's just hard for me to see, unless Congress does basically screw over the people 100%, the artists. I don't see how this company, even if this stuff was free, could make money. But beyond me. Other things going on in the market today. There are many ways to skin a cat. I'm going to get into this into the next segment. But I had somebody email me about somebody else, one of the other hosts, saying this or that or the other. And I want to say that one thing that I learned early on was that I thought there was only a few ways to make money, or maybe even one way to make money in the stock market. That people, if they didn't do it the way I did it, were probably wrong. And there is that kind of idea that traders do get. We get a bunker mentality that the only way to actually make money is our way. And to, whatever we're using that's new out here, some new technique, to a hammer, everything looks like a nail. And we need to not have such blinders on. But I'm going to talk about the way options work. We're going to talk a little bit about statistical biases, and just a little bit more about not getting too focused on a single way to make money, whether it is on being long or short, or buying options, or something else. A lot of times on TFNN, we have to paint with a very broad brush because there's always the opportunity for some guy out here to bet his house on one of our single calls, and we all know how bad an idea that could be. Anyway, we will be back in just a minute or two. You can always give me a call at 877-927-6648.
Andy Hecht, the host of the Commodities Hour, recently launched his newsletter service, the Technomental Commodity Report, and only 6 weeks in, Andy has already recorded a triple-digit winner. Andy advised his subscribers to purchase a long-term call option at 46 cents on July 11th, and then sent out a special update Friday, August 16th, advising his subscribers to close that position at $1.40. That's a 204% profit in just 5 weeks. The Technomental Commodity Report by Andy Hecht is released each Thursday morning, and right now you can get a month-long free trial to this subscription while locking in the low introductory rate of only $39 a month. Andy Hecht has been a commodities trader for over 3 decades. Let his experience work for you. Sign up for your month-long free trial to the Technomental Commodity Report today at TFNN.com. TFNN is having an open house in the Tiger's Den for 2 weeks, and the best part is that everyone is invited and you just have to be a member at TFNN. The open house in the Tiger's Den has already begun and will last through our week-long virtual trading competition, which ends September 13th. Use this time to exchange trading ideas with other traders in the virtual chat room and to discuss trading strategy. For all the information and to take part in the Tiger's Den open house, log on to TFNN.com today. You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC. Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different futures contracts? Now you can with TAS Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now you can receive a 2-week free trial to TAS Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com. McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a 3-fold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And we've got a phone call from Jason in Honolulu. We'll go right to him because half the time he's. It sounds like his cell phone's about ready to cut out. How you doing today, Jason?
Hey, hi, pretty good. Yeah. Thanks for taking my call. I remember you talked on the show that if a stock is less than $10, the mutual fund cannot buy it, like as in BlackBerry. You mentioned that they're trying to just
the funds. There'll be a couple of things in the charter of the fund. If you go and look it up in the filings for that fund, it used to be $5, but more and more they're changing it to $10. But it'll say in there that we're going to be fully invested by the 15th of every month, or in the case of about 85% of them, it says the last 3 days and the first 2 days of the month will be invested 100%. But also it'll be how the fund works, and a lot of the funds, probably 80% of them also, will have some dollar amount that they will not have a stock below a certain amount, and more of them are probably $10, and at least some of them are probably for legacy reasons are $5. But it's in the charter of the particular fund. So what's the question on that?
Well, I'm looking at this stock's OPK.
Mm-hmm.
So basically, it's very interesting. It just went up to $10 last 2 weeks ago, and then it just dropped all the way back down to the 50 days moving average.
Yeah, this is a recent IPO, isn't it?
No, it was around for. It has a long track record. It just kind of gradually going up. I thought my
No, and I mean the stock hasn't been public that long.
Oh, it has been around for a while. It has more than a 10-year track record. It's in Oreo.
Did it have an? Oh, okay. I'm sorry. I hit 3 years and it didn't look like it had updated. So that's fine. I just was trying to figure out when it went back. No, I mean this thing's got a nice uptrend, but the question would be, what happens when this thing gets to $10?
Yeah, it dropped right back down. It hit $10.
I mean, it's just buying and selling. The idea or the play from from the original question would be when this thing has a sign of strength over $10 and it can hold it is when the big funds will start coming in. So this is a very good looking stock. Thing could probably come back to $7 though, which is the problem. $7.5. But you'll see stocks. Go ahead.
That's the 200 days moving average, right? I think you're looking at $7.
No, I'm just looking back at the highs and the volume that we see back in the 125 beginning of this year, late January, and I see all that volume back in there. And it's you've got a couple of nice volume days out here, so this thing's probably rolled over on the top, probably going to be consolidating somewhere between this upper $7 range and probably up into the 9s. And it could do that for the next 6 months or something. It's going to have to consolidate those gains out. Now, the idea would be, from your previous question, would be when these things hit $10 and the funds get interested, that's when the thing goes from $10 to $40, right? So right now, if you go back and look in this, there just aren't going to be that many funds involved in the stock. So you're going to start seeing them really get involved in this thing. If it would stay over $10 for like 3 months, you're going to see the funds start picking and slowly getting in. And then more and more as it goes up, more and more funds would buy in. But this is the kind of thing where it went from 55 cents to $10. And, it's that's a nice run over time. But this thing's going to need to consolidate these moves out. You had basically a blow-off top here, which was the key, where this thing was, up at $10 and closed at $9. So you had 10% off the top, and then a couple of days later you had big volume. So someone's selling this back out. But no, I'd be sitting there. What I'd be doing is buying this thing probably in the low 7s if I could, and riding it up. And one of these times you're going to see a huge amount of volume come in, and that's going to be where everybody's diving in. And then it'll probably go and break that $10 level, and it'll just keep going and going and going.
So right now you won't short it, yeah? You won't short it?
$10 stock, no. No, I want a stock that's about $30 or more to short. Your odds that one day these guys get bought out is horrifically bad. You're shorted at $10, and the next day it's $20 because they got bought out. See what I'm saying?
Sure. Yeah.
Thanks for the call, Jason.
Hey, have a good day. Bye.
Bye. We'll be back in a minute. We'll get back to what we were talking about.
With the stock market flirting with all-time highs and volatility back, now is the perfect time for a 2-week free trial to Market Insights. On Monday, June 24th, Tom O'Brien closed out all 5 open positions in his daily newsletter, Market Insights, with all trades being profitable and ranging from a 2.23% gain all the way to more than an 11% gain in just one position for an incredible 32.7% profit combined between the 5 trades. Let Tom O'Brien's years of market experience work for you. If you'd like to see for yourself what kind of trading newsletter Tom O'Brien delivers to his clients each morning, then now is a perfect time to sign up for a 2-week free trial to his daily newsletter, Market Insights. In a volatile market like we currently have, the potential for fast market moves like we've seen recently is a trader's dream. So don't wait any longer. Sign up for your 2-week free trial to Market Insights today at the front page of TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
Well, back to what I was going to talk about today, because for the most part, we've got a market that's probably going to be going fairly sideways for a while. Let's just catch up and see anything. I mean, we've got some decent volume, not great. Certainly not great for September. Maybe great for the middle of August, 2.25 billion shares. But we're off 3 points in the S&P cash. As I said, I don't suspect that we're going to be up 10 points or down 10 points between now and probably Tuesday. I imagine we're probably going to be down Wednesday morning, pre-announcement from the Fed, and then we're going to have a lot of action. Now, what I wanted to talk about is just getting too stuck into one opinion. And probably this starts off great in a book by Nassim Taleb called Fooled by Randomness. But basically he's talking about options, and he was surprised that Jim Rogers kind of thought of as a legendary investor, mostly because he's on CNBC a lot, or was, during probably when this book was written. But Jim Rogers likes to go around and say someone did a study on the SEC and discovered that 90% of all options expire as losses. Therefore, you shouldn't play options, or you should only sell spreads. Probably a good idea if you don't think that visibly the statistic that 90% of all option positions lost money is meaningless, i.e. the frequency, if we don't take into account how much money is made on the average during the remaining 10%. If you made 500% on your options on the last 10%. Would the other ones went belly up 90% of the time actually matter? I'd take that bet any day if I could, know that 1 out of 10 times I was going to win the lottery. Unfortunately, most people don't have the kind of fortitude to go through that. And again, we don't have 30 minutes to go through this every single time it comes up on the radio. And so a lot of times we just paint with a broad brush one way, and mostly because we're not talking to people that have been on the street for 15 years and already know it. We can probably already know that if someone's listening to us, that they've probably been, I would say 80% of the people have been in the market less than 5 years. Of those, probably 10% are probably trading as a full-time business. The other 90% of the time, those people are at their jobs and doing things, and they're probably not as involved in it as, let's say, the hosts at TFNN. But, when you look through it, there's always normally another side to every thing in the market, and there's all kinds of ways to make money that you wouldn't think of statistically. But I recommend that book, Fooled by Randomness, not because it tells you how to trade, and not because I agree with everything that he has in his book. He's probably one of the worst people out here when you talk about everything to a hammer looks like a nail. He's fixed out, and let's say that he's made a lot of money, over $3 billion, buying way out of the money puts and calls. One of the things I did want to bring up, because I get people calling me, and I always ask them, what is the implied volatility on whatever they're buying? And I tell them that I don't want that to be over 30%. If you go to the CBOE and you go under Tools, it'll have volatility services, and I think you have to sign up for this, maybe not. But it'll tell you back in their last 10 days, last 20 days, last 30 days, what the historical volatility of the underlying stock is. And if you're buying puts or calls, one of the things I can tell you is that if that number's under 30%, you have at least a shot of making money on the put or call buying one side. Over 30%, you probably have little or none. This is kind of the equivalent of going and buying insurance for a house that's been robbed 3 times. What kind of money are they going to charge you? Now, if a stock has been going sideways for a while, let's say in this example right here, it's IBM. This thing's been, in a $10 trading range here for a while. The whole insurance is probably going to be fairly inexpensive for something like IBM. Each of these stocks that we're going to look at here actually shows the last 10, 20, and 30 days of the implied volatility. If you're in Kansas, what do you think the insurance rate is in the middle of Kansas for a hurricane? Probably about zip. If it's in Tampa, probably fairly good. And if you're in Miami, Homestead, probably going to charge you the highest rates available. It gets hit 20 times for every time one even comes close to Tampa. Unfortunately, we pay very close to the same kind of rates. But when you look at IBM, it is exactly what you would think. The implied volatility is around 12 or 13. Now, the idea is that if you were going to play these over time, that you'd want some kind of edge. But options on this are probably going to be fairly cheap for IBM compared to other stocks. And Apple, we saw a major bounce here in the last few days because of the move off the highs. It was right at the edge of doing something on Tuesday when they had their rollout. And now it's the 10 days is about 35%. I suspect that all the move, at least to expiration, is over in Apple. But you would have been right at the edge of being able to probably make any money statistically over time, even on buying out-of-the-money puts and calls. Netflix, everybody is looking at these. They've gone over 30%. I've seen Netflix over 100%. Your chances of making any money ever with the implied volatility in Netflix at 100% is about zero. The problem is the premium is going to be so large, and that premium is going to deteriorate all the time that you're actually the trade is going your way. And unless you get a 100-point move in Netflix, you have to be very careful about how you enter those positions because the premium is so high that you'll never make it. So when you do give me a call, or before you give me a call next time and you ask me about what are your option positions, I'd really like to know what that you've looked at the implied volatility down here. The idea is more like IBM. Find a stock that hasn't been moving a great deal and maybe slowly has retested its high. The implied volatility is low. Your premium's going to be low, and your opportunity to actually make that kind of 400 or 500% return on an option at least becomes a possibility. So don't get it's at. Now, one of the things that you have to know is that if implied volatility was always correct, then you would never make money. Implied volatility is a great thing to look at in the rearview mirror. It is a poor predictor of actual volatility. So when you look at Nassim Taleb, what does he do? He buys way out of the money puts and calls. And there is a thing called a fat-tailed distribution. I've got a picture of it here on Tiger TV. And what he's looking for is a mathematical edge out there on the far end by buying these way out of the money puts and calls. He can afford to go 3, 4, or 5 years without a big major win. But the crash in '87 made him. He made, I think, himself $1.1 billion. He made Soros and some of these other guys a huge amount of money working the mathematics of it off. And over the years, I think he's made over $3 billion buying way out of the money puts and calls that aren't spreads. So there's more than one way to make money in this market. A lot of times only when we can devote a show like today of going in and looking at the opposite side of these coins, you really can get an idea. But I think what we're going to have, the reason I'm bringing this all up, I think what we're going to have next week is a very good opportunity to have a low implied volatility going into a very volatile environment. And I don't think I'd be buying Friday's expiration puts, but I have a feeling that October's may look very sweet come Monday or Tuesday before everybody gets all wigged out for the Fed announcement. Anyway, fat tail distribution is the way that Nassim makes his money, and that is normally at the very edges of probability, they go down to zero. Well, unfortunately, in the market, if you've played it at any length at all, you find out that the markets can go up much higher and down much lower than you ever thought. At the very end, when traditional distribution would say that the market is over, it turns right back up and makes it even worse for people. And kind of what I'm looking at in gold. I'm hoping that we get that kind of washout that is the once every 10-year kind of washout, one that people don't see very often, and therefore they don't really know how to set the odds on it. And when we get those fat tail distribution, it's a great time to be short or long because most people just don't understand the probability of it. If I told you that I'd flipped a coin and it landed on heads 12 times in a row, you'd probably be impressed. If I then told you that I'd flipped the coin 10,000 times to get a run like that, you wouldn't. The market, 12 times heads up 12 days in a row, down 12 days in a row, not all that impressive when we talk about 10 years. If we just flipped a coin, which theoretically is going to land heads or tails 50% of the time, but unfortunately, we as humans are probably the worst animals in the world of trying to figure out actual odds. Kind of makes me think of when I was learning to fly. They told you to look at the instruments. Don't trust what your body's telling you. Don't just trust those instruments. If you don't trust the instruments, you're going to probably fly in a cloud, and you're going to turn the plane upside down. You're going to fly it right into the ground thinking that you're heading higher. It's very easy to get confused in it. And same way when we're dealing with the market. But just know that a lot of things are going to happen in the market. It isn't like the market existed for the last 12 days and we were up 12 days in a row. The market's been around for a long time, going to be around for a long time. And even though we may have 12 up days or 12 down days, remember in the context, if you were flipping a coin 10,000 times, would you really be that impressed if it flipped up on heads 12 times in a row? One of the best examples of this, and there is a website out here, it's called grand-illusions.com, is the Monty Hall problem. And again, this whole idea is to maybe expand your mind just a little bit into probabilities. Anybody that ever watched Monty Hall on his game show knew that you would go in and you would get the opportunity to pick what was behind any of the three curtains. Monty would then say, hold on just a second. I'm going to open one of the other curtains that you haven't picked, and I'm going to show you a goat behind it. Now you have two curtains, one you picked, one you haven't picked, but you now know that at least one of the curtains that the prize wasn't behind, and it was always like a new car or something. Now the question is whether or not he's going to give you the opportunity to switch. Now most people during the game show, about 75% of the people never switched. They just stuck with the curtain that they had to begin with. Now what they didn't know is their odds by not switching of winning the prize were 33%. If they actually switched at that point, their odds would be 66% that they'd win. And if you go to this website, grand-illusions.com, simulator/montysim.htm, you'll be able to play the game yourself. But fairly interesting to find out that a lot of people still argue whether this is right or not. There are PhDs in applied statistics that will argue infinitum. And guess what? You can play it yourself. You can use cards. You can use the simulator. But just like learning to fly, you have to trust your instruments. You can't trust your gut on a lot of statistics. And maybe this is a good way. I like playing the game every once in a while just to see, because it is so counterintuitive to think that your odds would change by doing it. There's a big explanation on the web and on this website for why it actually works that way. But when we've got a market out here that's not going anywhere too fast, we're down 3.5 points, 2.3 billion shares on a consolidated tape. Quiet day, not a lot of action. We don't anticipate action. Always a good time to start like spring training. They always throw the ball around. They go out and exercise. They continue to do all of the drills that get them up to speed again for the year. And not a bad time to use a little mental floss and think about how statistics, especially in options and maybe even in futures, can affect your trading in the future. But just a little bit of thought out here. Maybe expand your horizons a little, but certainly look at the implied volatility before you place an option trade. We'll be back in just a minute.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
On Wednesday, August 14th and Thursday, August 15th, Tom O'Brien advised his Gold Report subscribers to close out 6 of their 9 open positions, all winning trades ranging from a 10.6% profit to an incredible 48% profit in just one equity. And all 6 of those winning trades had been initiated no earlier than just the previous month. With the 600th weekly Gold Report issue fast approaching, Tom O'Brien brings an incredible wealth of knowledge and experience to the gold market and the equities within the industry. That's almost 12 years since this powerful newsletter first began, and right now you can get a 30-day free trial to the Gold Report by visiting TFNN.com. Make sure you're a subscriber, as this volatile gold market provides trading opportunities after declining all the way from $1,900 to under $1,200 an ounce in only 2 years. Get your 30-day free trial to the Gold Report today by visiting TFNN.com. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve, yet you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.
Join Andy Hecht as he teaches you how to make money in commodities. The Commodities Hour, next on TFNN.
Well, we've got a lot of stuff going on here at TFNN, and one of them is the big trading contest. And actually, I'm going to pop that up right now. Big winners for yesterday were G. Kaplan, X. Vang, O. Fluman, C. Burr, and A. Klein. I wonder if that's in order or how much money they won. They all won the same. Maybe I'll have to have this explained to me. Probably, I'm kind of interested, but since I can't win, I probably didn't delve into it too much. But you have to trade each day. And your odds are pretty good if you just trade. Even if it isn't a winner, you're going to at least have a good chance for being a daily winner out here, because it's not whether you succeeded or not. Just your hat is in the ring. Zhu Vang. Huh? Oh, okay. Could be. Over $46,000 in winning so far. Thought they were giving $10,000 away. I digress. Looking at some stocks out here that are getting kind of close. Kind of interesting that Horsehead Holdings Company, which is a zinc holding company. Maybe Andy, who's stalking me at this very moment, I can see him kind of peeking around the corner here, getting ready for his next show. Maybe, I don't know, they're zinc futures? Probably. Horsehead Holding Zinc, Z-I-N-C. This thing's getting very close to one of the major highs this thing had a while back. And I'm kind of getting an idea on this thing when looking at industrial metals, which zinc is one of them. June 7th, 2011, this thing came out at $13.87. Not a huge volume stock out here, but, we're under that maybe 20, 30 cents out here. And volume is not all that bad out here. But you need this thing in the next couple of days to break 1387. And kind of interesting that break above that takes you up to $17.98. So maybe we'll get an idea on what that is doing here shortly. YY Incorporated. Why? Viaduct. It's a duck. YY is the symbol on this. Like I said, so many of these stocks that do break previous highs out here, even if it's on volume or pulling back into the trading range. This is one that broke on a lighter volume a couple of days ago. August 2nd, it had 4.6 million shares at $48, got to $49.82, and 3.5 million shares, so 1.1 million short. Back into the trading range you go. Kind of reminds me of that joke, back on your heads. Or no soup for you, the soup Nazi. No breakout for you. YY operates an online social platform in the People's Republic of China. Probably enough to be suspicious right there if it is a public company in China. The other one that really caught my eye with the time that we have left out here is the materials select sector, XLB. This thing, of course, is basically banging against some fairly decent highs. The April 6th high of 2011 was $41.28. It had 15 million shares. So we've broken above that over the last couple of days, and you needed 15 million shares. Well, on the 10th, you had 7.2. Yesterday, you had 6.1. And today, you got 4, and it's getting close to closing back below that 41.28. That would probably also be a pretty good signal that maybe, at least in the materials select sector ETF, that we are banging against these highs with lighter volume and may not get what we want. On a shorter time frame, this thing got to $41.61 on just May 22nd's high at 12 million shares, and it's gone over that again on lighter volume. So going to be light. Well, we're going to be in studio tomorrow, and we'll be here at the same bat channel, same bat time, and then be on the 4 o'clock hour with Tom O'Brien talking technology.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.